Hello, welcome to the weekly technical analysis review for Tuesday, February the 4th. I'm Rafi Barjan, and this week we're going to be looking at the euro dollar, the dollar CAD, and WTI oil futures. So let's start with the euro dollar pair in the daily chart. Looking at the momentum indicators, we can see the stochastics are looking fairly bullish, though the percentage K line has dipped slightly lower. The MACD histogram has crossed just above its red signal line, so a bit of positive signals coming there from the momentum indicators. But looking at the price action, euro dollar is in the red today. Prices are hovering around the Tenkan Sen line of the Ichimoku cloud, and we do have near-term resistance at the 50% Fibonacci retracement of the up leg from 1.0878 to 1.1238. So that level comes in at 1.1058. If we do get across above that level, then we're likely to see even stronger the positive momentum gaining some strength, and we could see euro dollar aiming to go back up towards its 50-day moving average, which is also near the bottom of the Ichimoku cloud. So that's at 1.1093. Slightly above is the 38.2% Fibonacci at 1.11, and above that is the 200-day moving average at 1.1124. So quite a few hurdles there before prices recover towards the top of the Ichimoku cloud at 1.1153. That's also the 23.6% Fibonacci. And we can see, though, that in the medium term, prices have been consolidating, and we have to see a break above the top from last year, 1.1238, in order for prices to break above that range, and in order to see a shift to a more bullish picture in the longer run. To the downside, though, if we do see prices continuing to drift lower, support should come at the 61.8% Fibonacci at 1.1016. Slightly below that is that important support around 1.0990. We can see that was the low from January, and also a couple of times in November last year. Breaking below that, we could see euro dollar heading towards 1.0955, the 78.6% Fibonacci, before it heads towards the 2.5-year low 1.0878 from the October of last year. Let's now turn to the dollar CAD pair. It's looking strongly bullish in the short term. The RSI has crossed above the overbought territory at 70, and the MACD is also strongly bullish as well. But looking at the Bollinger Bands, prices have been spiking above the upper band for the past few sessions. So that definitely is telling us that it's looking fairly overstretched at the moment, and we could soon see a downside correction. If that happens, support should come at the 200-day moving average of 1.3225. Then we have the 50-day at 1.3144 before prices would hit the middle Bollinger Band, the 20-day moving average at 1.3123. And below that, we've got a couple of congestion areas at 1.3077 and 1.3030 before prices were to reach the lower Bollinger Band at 1.2960. For the time being, though, if we do see continuation of that strong uptrend, resistance should next come at 1.3320. That's been a resistance level, a strong obstacle back in November of last year. And then above that, we have that 2.5 months high, 1.3382 from September of last year. So those are the two key levels to watch on the upside. But still, despite that impressive uptrend, prices do remain within a range in the medium term. And finally, let's have a look at WTI oil futures. It's not looking very good at all. We can see that steep sell-off over the past month or so, and prices did break that key support of 50.63 to 23.6% Fibonacci retracement of the downleg from 76.87 to 42.53. So that support had held fairly well since June of 2019, but we did see it breaking below it, though today prices have just about recovered back above that key support level. If that support does break more convincingly, we could see prices then stalling around 47.50 before heading back towards that low of 42.53 from December 2018. In order to see a recovery, though, the pair WTI oil futures would need to first overcome the 52.50 hurdle, and then after that there's the 38.2% Fibonacci to watch out for at 55.65. Beyond that, though, it would be very difficult for oil prices to make much headway, because we've got the moving averages there followed by the 50% Fibonacci. So for now, it's not looking very likely to see resumption of that uptrend we had late last year, and so looking at the bigger picture, oil prices are likely to continue consolidating. So that's it from me. Thank you much for watching, and have a great day.